The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Hi there, welcome to the COB. I'm Nadine Blaney.
And I'm Tessa Arcilia.
Yeah, it was, Tessa, a positive session right from the get-go.
And it's a green day, considering a very quiet day. But you know how we didn't have a lot of news coming from overseas. You have the US and UK markets closed, but it's been a green day except for one.
Oh, we'll get there. We'll get there, no doubt. But let's revel in this, shall we? Up by about 0.7%. So the last of the day's trades are already through the CBOE Australia Index. We still do have to wait for the official close for the S&P ASX 200, but it looks as if the two are moving pretty much in lockstep.
Pretty much, yes, at the moment. And again, 10 of 11 sectors higher for now today. So let's wait a few minutes for the final numbers there. All right, so what was it about today?
We had interest rate sensitive stocks doing pretty well. Now, I don't think any real expectations have changed around interest rates, but we did have some good news coming out of, Lendlease. You can see Lendlease going local. I just spoke with Simon Mahoney from Allan Gray. So shrinking to greatness is still a question mark, but he thinks that it's got a way better chance of, being more profitable, better returns to shareholders. And it was really interesting to get his commentary around the board, because it sounds to me like that's sort of next up for his wish list.
But it is really interesting how investor activism does seem to have a huge impact, especially on ASX companies. And again, the strategy of how do they now view the global market? Is that less of there's less of an upside if you're looking at investing overseas for them?
Well, Simon said, look, there's no sort of golden rule. Some Australian companies have gone overseas and been very successful, but you are taking on a lot more risk. But he named, a shopping list of things that had been going, less than ideally at Lendlease, that eventually brought that international business, I suppose, to be such a weight around its neck. We'll get that interview up online for you shortly if you'd like to have a listen. Of course, if you're just coming to the party, Allan Gray was one of the sort of activist shareholders that brought about this change at Lendlease. So it was good to get the view on that. Yeah,
no, it was. And of course, another thing we're watching was energy. So energy is one of those sectors that fell today.
Oh, so that's your one.
That's the one.
That's your one.
That actually didn't make it. But, the oil is looking at 3-month low at the moment, and we have the OPEC Plus meeting on Sunday.
Yeah.
So all eyes on that to see where. I think it's really more supply and demand, and seeing whether they'll, keep the cuts up.
Which I think is interesting as well when you put it into context of the news today from China. So industrial profits in China returning to growth in April, getting some policy support through there. We'll see how that impacts.
And also chip companies. I think that's all having a positive impact on China when we see the demand for some of those microchips and, back to making stuff in China. But then there's politics involved behind that. So interesting one to watch.
Yeah, speaking of Chinese politics, hailing a new beginning with the US allied South Korea and Japan, and met with the leaders of those two countries today. That was the Premier Li Qiang. Now, let's get to these sectors, shall we? Flash them up quickly. Let's go through it. Centre Group, Goodman, Dexus, Mirvac, all higher today. And there's your negative sector.
Yes, so of course, Woodside, Paladin, Boss, all down, and Neuren Energy looking a little bit up over there.
Telstra looking good, up by 2% after disappointing a bit last week. Aussie Broadband up by 2.3%. So this is traditionally a little bit more defensive area of the market. But the best performer today is a company called Neuren Pharmaceuticals. So it's up by close to 16%. Why? Because positive trial results coming through. These companies and their share price performance on the day sort of live and die by these trial results that come through. It's a lot
of that. I love following all these results for pharmas, especially those in clinical trials. Another one in the news today, Cettire. So they had categorically rejected allegations that customers purchased counterfeit products from its site. And I think the fact that they denied it, I think just went down well also with investors. Interesting story to watch there.
Megaport chair and founder Bevan Slattery selling $16 million worth of shares. That's not always going to go over well. And Ingenia Communities rose after saying it's on track to hit the upper end of its FY24 guidance.
And of course, Lendlease, that is our stock of the day. It rallied after the property group says, as we've talked about already, that it is divesting from some of its overseas projects and focusing back on Australian real estate.
And that was big surprise stock of the day. Lendlease, of course. David Lane from Ord Minnett, Scott Phillips from the Motley Fool. Listen to what they have to say.
Is this announcement gives the ability to unlock some of that value in the assets that they've got. Their gearing will be down, forecast to be around 5 to 10%, so lower gearing. We've actually got a buy recommendation on it. So we had a buy, we had a buy prior to the announcement, and at this point in time, I think, that's our view.
All right, great. If you're a long-suffering Lendlease shareholder, you made 10% this morning. That's a pretty good deal. So take the money and run and be thankful. I think it's really ambitious to expect necessarily all of a sudden they get better results because of something that was forced on them from the outside. So maybe this is a buying opportunity in hindsight. Very, very hard to know. It's really even hard to hold this one for me. I've got to say, again, just on the basis of the history of the last 25 years, it's just an ugly story as a business, ugly story as a share price. I don't know, I'd rush out to sell, but if I owned the shares, I probably would sell them and go and put the money somewhere else.
Right.
Not a lot of love there for Lendlease coming through. Let's go to Henry Jennings from Marcus Today, see if he's got any thoughts on Lendlease. Are you a holder?
No, this has been hi girls. This has been an absolute dog of a stock for such a long time. It used to be such a blue chip. It was a massively core part of a lot of people's portfolios for decades, and it really was a class act. But it just, as John Wiley said, it lost focus. It overextended. It went overseas. It was all a bit mixed up. This is shrinking to greatness, which of course many stocks try and do, but I guess it does refocus the company. It's going to take a little while to work through this as well. So it's got a fair few unfinished projects overseas too. So that'll be interesting. And they're going to take a big write down too. So for me, it's not really on my radar. I'm not sure, apart from the one-day blip higher, which is really just giving back or getting back what they lost in the last month or so. I really wouldn't be looking at that one as any kind of buy or accumulate here.
Yeah, and one of the things they were saying that affected their overseas projects, of course, is the uncertainty in the macroeconomic situation. They have several markets that they're operating in. And I want to pick your brain, Henry, on your view on the macro situation, because I know you do have a strong view, and to our viewers, you will read Henry's view in our newsletter. Where do you see that? Because even I was reading Paul Krugman saying that he is fanatically confused about where interest rates are headed. And anyone who says anything with confidence are deluding themselves. Your thoughts, Henry?
Well, I'm happy to delude myself at the end of the day. Let's face it. I don't know. It's going to take too long to pick my brains. The Fed and everybody has said that the path of interest rates is data dependent, and you have to look at what the data is coming out of the US, and there is absolutely no need for the US Fed to cut interest rates, really and truly. The economy is going. It's very much Goldilocks at the moment. It's strongish growth. It's got good employment numbers, it's got good consumer confidence, albeit a little bit softer recently. It's got inflation softening a little bit. It's not within that band yet. And, really and truly, why would the Fed need to, apart from the fact they said they would? I mean, that's the only thing. If they hadn't said they would, apart from the fact the market wouldn't have rallied to where it is, but we wouldn't be talking about interest rate cuts endlessly. As far as we go here, of course, the RBA has an interesting conundrum because without question, there are some parts of our economy that are falling well and truly into the mire, if you like. It's certainly not a great economy at the moment. And it is a bit sort of, it's a bit too speed, I guess. You only got to look at the Sydney Morning Herald on the weekends and see the number of cruises being offered, high-priced cruises. An older generation Australians have got money to spend, and they are spending it. They haven't seen it this good in terms of term deposits and interest rates for so long. So, they're using that. But the youngsters, the younger generation, really are struggling out there. It's not easy, and I think you're seeing it in retail numbers. You saw it with AP Eager. We've seen it with JB Hi-Fi even. it's not an easy world out there at the moment for consumers and for the economy. So I don't think the RBA is going to cut anytime soon, to be honest, because I think they're going to be concerned about these tax cuts coming through. But they probably should cut, but they probably won't until the Fed does. And if the Fed doesn't, Michelle Bullock will probably keep them where they are. And she doesn't want to be the governor coming in from Phil Lowe that stuffs it up and cuts too early and reignites inflation.
So I was reading a really interesting note from Macquarie today, talking about the risk of a downgrade cluster. So pointing out that we heard from Sonic, we heard from AP Eagers, we had Fletcher Building, James Hardy, and just saying that it looks as if we could be in for a few more big confessions in the next month or two. Are you of that view, given what you've just said?
I think we are. We haven't got reporting season until August. We've just gone through the Macquarie conference, which I think there was 122 companies that presented at that conference from memory. And most of them, I'd say probably 80% of them reaffirmed guidance. So it's very much a sort of a reaffirmation of guidance. There were a bunch of high-profile ones that have downgraded, and I do think that points to a softer economic cycle that we're experiencing. And there's no doubt, I think, that the higher mortgage rates are finally starting to bite and finally starting to hurt the consumer, albeit there are pockets where there is a little bit of spending still in the economy. But, just walking around, anecdotally, I was at Aldi on Saturday, and the middle aisle is always good fun. And usually at this time of year, you can't find ski gear in the middle aisle of Aldi for love nor money. They sell out very quickly. Let me just say, there was tons of it. So it is certainly one of the first things that people will pull back on is those expensive trips. And you don't get much more expensive than skiing, even if you do stock up with your woolly socks and your gloves at Aldi.
That's so funny. I noticed the exact same thing, because usually people are fighting over this stuff in the aisle, and it looks like they can't give this stuff away, because also, even if you can, you're lucky enough to be able to afford to go skiing. Why wouldn't you just go on a community notice board and ask if anybody's got last year's Aldi ski sale stuff that the kids have all grown out of? It doesn't make sense.
Or just go to Japan. You just go to Japan, which is cheap as chips. If you want to go skiing, that's the place to have gone. Why go to Thredbo or Perisher or Mount Hotham, etc., where the ski is unpredictable? Anyway.
Macquarie, I think this one was interesting. I might send you this note, but it says downgrade risk is, and it even names Lovisa as one of these companies. And you know how much everybody loves Lovisa.
Yeah, and just following on from that, I guess when we start getting into the reporting season, I was reading quite a few notes on looking at the pullback on the ASX 200. So are you of that view as well, that we're going to see that downward trend coming in soon, Henry, with this pullback?
I've always been the view that we were fat and happy at Easter, and that we'd see the highs before Easter, just before Easter. And we have seen it again, so you've got another chance to be fat and happy. 7,700 seemed to be support. It bounced off there. The next support is 7,600. To be honest, Tess, I think we're going to go sideways for the winter of discontent, if you like to quote the Bard, only because, the US goes into a bit of the summer doldrums. We have driving season. We've got Memorial Day today in the US. We've got a bank holiday in the UK, and that really does kick off the summer season, if you like. So, school holidays, it's half term in the UK at the moment. School holidays kick in June, July. So I think for us, as Green Day once sang, wake me up when September ends, because I think we're going to be sort of sideways to drifty for a few months as things play out. And then, of course, we're going to have lots of fun and games heading into November with the US presidential election, which is going to just be an absolute hoot and fascinating to watch.
Don't remind me. All right, yeah, Macquarie as well. I'm telling you, I'm name dropping Macquarie a lot. Sentiment could still get more bullish in the short term, but given investors are already positive, we expect a correction in June, which is often a weaker month. Henry, technology as a sector outperformed through the month of May, helped along, I think, by earnings upgrades coming from Technology 1 and 0. But if that was the best performing sector through the month of May, do you think that tech can continue to outperform?
Well, I guess the problem with our tech sector is it's not very techy, is it? Actually, when you look at our performance in terms of the All Tech Index, year to date, we're up 14.2%. Year to date for the NASDAQ, it's up 12.7%. Even over a 1 year time period, we're pretty much on par with NASDAQ. But everyone gets fascinated with the Magnificent Seven or the Famous Five or the Mysterious Four or the Fab Four. But our tech sector is not too bad. The problem, I guess, for our tech sector is Square or Block, as it is in the US, is such a major part of that index. But that has been going pretty well. WiseTech's been going pretty well. Even REA's been going pretty well. And Xero's been going pretty well. So we have had some big companies doing well, and that is really following the NASDAQ in the US, and it's kind of just part of the game, I guess. NASDAQ goes up in the US. We look at tech stocks here, and we haven't got that many. So you pile in. Whether it will last, I don't know. I think the US rally is going to stall, I must admit. I think it's going to broaden and flatten out and maybe not quite so concentrated in the big tech stocks. We could see a sort of a broadening of that rally, and we could see the tech sector here just, it's some pretty elevated prices at the moment, the likes of Xero and WiseTech. Pretty elevated. So I think it's probably sideways for now with the tech sector. I don't think we're going to get sort of an interest rate bump in the sector with cuts, which would obviously help in terms of those valuations. And I think NASDAQ needs to consolidate a little bit here. It's record highs again. And it's, we've got through reporting season. We're probably going to have to wait another 3 months to confirm probably what we already know with AI stocks.
All right, Henry, thank you so much, as always, for joining us on the COB. Henry Jennings there from Marcus today.
See you, Henry. All right, let's get across some of these market leaders. I think we did detail some of them when we were talking about the corporate stories. Neuren Pharmaceuticals, Lendlease, HMC Capital completed a big equity raise, or capital raise, I should say, to fund the purchase of, I think it was called Payton Capital. Don't quote me on that one. It came through last week. And Ingenia also came out and upgraded its guidance, up by 3.8%.
And on the other end, the laggards for today, Audinate at the top there, just down by 6.7%. Nickel Industries, Strike Energy, up 24%. They're on the list as well, and Iluka Resources.
Yeah, I just find it really interesting. Audinate, that's off the back of its CFO stepping down. So obviously the market just doesn't like that uncertainty, and I can't see any news associated with any of those other companies, so keep that in mind. In the smaller end of the market, let's see what this throws up. Dimerix will be speaking with the CEO, not today, I think Wednesday possibly, up by 25%. So they've sold the rights to their product in the Middle East, and it's done really well. Invista, Potentia Capital Partners took a big stake in the company, so sending its shares about 18% higher.
All right, and the laggards for the small caps, you've got Gold Hydrogen there. Oh, down almost 30% there. I don't know if there's any news related to Gold Hydrogen. AGC there, Cyclopharm, St. Barbara, and Findi.
I'm just trying to find out, because we had a huge drop. Yeah, Gold Hydrogen. I mean, it's a small company, but so these moves can be accentuated. But interim well testing update came through today, and I dare say, without having read it, might not have been the best news if the market is a gauge of that. Yeah. So tonight, we've already sort of told you that it's going to be a bit quiet with US markets closed, UK markets closed as well. We did get the data out today from China. That's kind of what we were looking forward to. But, don't despair. There's lots of inflation data coming later this week in particular.
And we will be seeing the retail sales, of course, something we're looking forward to getting the numbers on. Japan CPI also out, Serco earnings out, and we've got a couple of AGMs, and Elders will be ex-dividend.
Yeah, that makes sense. It reported just last week. So let's, Tessa, check in on how this market finished with the S&P ASX 200 closing a little bit higher than what you see there with the COB Australia index. It closed up 0.8% as far as I can see.
For the ASX, it's 0.79% there, almost the same. And sectors-wise, it remains that energy is the only one down. So we're finishing off on a good note, I guess, on a Monday.
Yeah, I'll take it. Hey, should we wrap it up there then, Tessa?
We shall, on a good note. Thank you so much.
See you tomorrow.
Bye.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil. Oh, hey, Ken.
Here we go.
You still trading? Pepperstone. Trusted in over 160 countries, you?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible!
1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful!
It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.